When we think about the economy, banks are often overlooked, seen as just another part of the financial landscape. But in reality, they're the backbone of our economic system, quietly supporting almost every aspect of our daily lives. Banks are the financial heart of society, pumping money where it's needed, just like a heart pumps blood. They keep the flow of funds moving, ensuring that businesses, families, and communities have access to the resources they need to thrive. They keep our savings safe, enabling families to plan for the future and businesses to grow. Whether it's saving for a child's education or expanding a local shop, banks make these dreams possible. But banks do much more than store money. They fuel ambition by providing loans for new businesses and mortgages for homes. They help turn ideas into reality, supporting innovation and entrepreneurship at every level. Without banks, economic growth would stall, making it hard for companies to expand or invest. The absence of lending and financial support would leave many dreams unfulfilled and communities struggling. Danske Bank, as a major player in the Nordics, has a ripple effect across the region. Its decisions and stability influence not just Denmark, but neighboring countries and their economies as well. A stable, profitable bank signals confidence to investors and security for everyday people. It reassures customers that their money is safe and that the financial system is working as it should. Danske's performance impacts everyone from small business owners to retirees. The bank's health can affect job creation, retirement savings, and even the ability of families to buy homes. Understanding its health is like taking the pulse of the wider economy. When Danske is strong, it's a sign that the region's economy is healthy and resilient. The bank's profits and losses aren't just numbers, they reflect its ability to serve its vital role. These figures tell a story about trust, stability, and the future of the communities it serves. A profitable bank can invest in security, innovation, and support the community through lending. It can adapt to new challenges, protect against threats, and help people achieve their goals. So, Danske Bank's financial outlook is really a story about the resilience and direction of a key economic pillar. Its journey reflects the hopes and ambitions of millions who depend on it. Let's see how Danske Bank's journey in 2025 shapes the future for its customers and the broader economy, and what it means for the next chapter of growth and stability in the region. To truly understand Danske Bank's financial health, we need to look closely at how it generates its income and sustains its business model over time. At its core, Danske Bank relies on net interest income, the difference between what it earns from lending money out as loans and what it pays customers for their deposits. This is the bread and butter of traditional banking. This steady stream of revenue forms the foundation for most banks, providing a reliable base even when markets fluctuate. But Danske doesn't stop there. It also brings in fees from a wide range of services, including investment management, international money transfers, and corporate financial advice. These services help diversify its income. When economic activity picks up, these fee-based revenues tend to rise as well, reflecting increased demand for financial services. The bank's trading and insurance divisions add even more diversity. Trading generates profits from financial markets, while insurance offers stable, long-term income streams that can cushion against volatility elsewhere. In 2025, Danske's earnings were a mixed bag. Interest income dipped, partly because it sold its Norwegian business and faced tighter lending margins, but other business areas showed real strength and adaptability. Fee and trading income played a crucial role in balancing the scales, helping to offset the headwinds in more traditional banking areas and keeping overall performance steady. This diversified business model is a key reason for Danske's resilience, allowing it to weather challenges and adapt to changing market conditions. The story of 2025 is one of shifting strengths, with new growth areas stepping up as older ones faced pressure, showing Danske's ability to evolve. Now, let's break down the numbers in detail to see exactly how this dynamic played out for Danske Bank. Danske Bank's net profit for the first 9 months of 2025 was 16.73 billion Danish kroner, a figure that draws attention in the world of Nordic finance, reflecting both the scale and complexity of the bank's operations. That's down 5% from last year, a decrease that might seem concerning at first glance, especially in a competitive banking landscape. But the story is more nuanced than a simple drop in profit. There are several layers behind these numbers that reveal a more complex picture. Total income stayed steady at 41.61 billion DKK, showing resilience despite some business lines earning less. This consistency is a testament to the bank's ability to adapt and maintain its core strengths. This stability highlights the strength of Danske's diversified model, which spreads risk across different sectors and services, helping the bank weather economic shifts. Operating costs were tightly controlled, remaining flat at 18.99 billion DKK, even as inflation rose and put pressure on expenses across the industry. The bank balanced cost control with continued investment in technology and digital upgrades, ensuring it stays competitive and meets evolving customer needs. The main reason for the profit dip? Higher loan impairment charges. Money set aside for potential loan losses, a prudent move in uncertain times. Last year, Danske reversed some of these charges, boosting profit. This year, it set aside 258 million DKK as a precaution, reflecting a more cautious approach. Despite this, loan quality remains strong, and the bank's overall financial health is solid, with robust risk management in place. The numbers show a bank managing challenges while staying on course, demonstrating both resilience and a clear focus on long-term stability. Let's dig into Danske Bank's income streams for 2025. Net interest income, the biggest revenue source, slipped 1% to 27.16 billion DKK. This was mainly due to selling its Norwegian personal banking business and tighter market interest margins. The sale was strategic, but it meant less income from Norwegian loans and deposits. Lower market rates also squeezed deposit margins, a common challenge for banks. Insurance income dropped 22% to 1.1 billion DKK, not from poor performance, but because Danske set aside extra reserves for older insurance products. This prudent move reduced reported income, but strengthened long-term stability. These declines explain much of the 5% drop in net profit. Yet, other business areas stepped up, keeping overall income nearly flat. Danske's ability to offset challenges in core areas with growth elsewhere is key to its resilience. The bank's balanced approach sets the stage for a strong full-year outlook. While some areas struggled, others powered Danske Bank's growth in 2025. Net fee income rose 2% to 10.57 billion DKK, thanks to more customer activity in investments and corporate finance. The trading division surged 12%, reaching 2.36 billion DKK, as Danske's traders capitalized on volatile markets. Assets under management hit a record 954 billion DKK, with strong net inflows, a clear sign of client trust. This growth generates steady management fees and signals confidence in Danske's investment expertise. Lending grew 4% to 1.74 trillion DKK, driven by demand for home loans and business loans. Deposits also rose 3% to 1.06 trillion DKK, showing continued customer confidence. Dual growth in lending and deposits is the lifeblood of any bank. These bright spots offset softness in other areas, proving Danske's core franchise remains robust. The bank's growth engines are firing, even as it navigates a complex environment. Success in banking now depends on technology as much as finance. Danske Bank is investing heavily in digitalization, from mobile apps to internal systems, to make banking faster, safer, and more convenient. The goal: a seamless customer experience, with intuitive digital platforms and self-service options. Automation is streamlining operations, freeing employees for higher-value work and reducing errors. Even as costs stay flat, tech spending is rising, seen as a strategic investment, not a luxury. This digital push is building a modern, agile bank ready for tomorrow's challenges. Danske's tech focus is about long-term growth and staying ahead in a rapidly changing world. Danske Bank is embracing artificial intelligence, rolling out 12 new generative AI tools in 2025. Tools like Danske GPT and Danske HR Assistant are transforming how employees work, drafting communications, analyzing data, and handling routine HR queries. This digital workforce boosts productivity, letting staff focus on clients and strategy. AI streamlines internal processes, improves service, and empowers employees with better insights. The investment in AI isn't just about cost savings, it's about delivering higher quality, more personalized service. By integrating AI, Danske is building a competitive edge for the future. This strategic move positions the bank as an industry innovator. Danske Bank's results matter for customers and investors alike. Strong capital ratios, like a CET1 of 18.7%, mean deposits are safe and the bank can weather economic shocks. Tech and AI investments promise better digital experiences, faster service, and more personalized advice for customers. For investors, stable income, cost control, and growth in key areas show resilience. A 12.9% return on equity and a robust share buyback program signal management's confidence. The bank expects full-year profit at the upper end of its guidance, offering a clear, optimistic target. For both customers and investors, Danske's strategy is delivering real-world benefits. It's a case study in navigating complexity with a focus on future prosperity. Danske Bank's strategy for 2025 is built on financial strength, efficiency, and focus. The bank is managing challenges, like pressure on interest income, while doubling down on growth areas. Strong customer relationships drive lending, deposits, and fee income, providing a stable base. With a capital ratio of 22.4% and liquidity coverage of 158%, Danske has a fortress balance sheet. Investments in technology and AI are streamlining operations and empowering employees. The goal: a leaner, more agile bank with improved profitability and capacity to reinvest. Danske is balancing divestments with organic growth, cost control with tech investment, and short-term pressures with long-term vision. This disciplined approach is turning 2025's complexities into a story of success. Danske Bank is emerging stronger, ready for the future.